Amazon reported Q1 2025 earnings on May 1st and had a slight beat on the top line and smashed the bottom line. But AWS came in slightly below Wall Street's expectations, and the CEO, Andrew Jassy, revealed a massive AI spend for the quarter. Let's break down the details. I have an exciting episode for you all today. I will start with the bullish numbers in the earnings release. I also talk about the bearish numbers as well as things to watch. The earnings conference call already happened, so I will go over some of the key highlights, especially around AWS, data centers, AI, and Amazon's continued capital spending on AI infrastructure build-out. It sank it for Mistry Finance with more finance updates and news. Thank you for being here. And if you haven't already done so, hit that subscribe button and bell icon so you don't miss a thing about what is happening in finance. Now, Amazon is part of the Magnificent Seven. I am a long-term Amazon shareholder, and after this earnings report, I am watching closely what Amazon has to say about AWS, AI, its AI infrastructure build-out, and tariff. Now, let's begin. At the end of trading on May 5th, 2 full trading days after Amazon released its earnings, Amazon has declined 2%. Since the start of the calendar year, Amazon has declined by 15%. Let's now take a look at the earnings press release that accompanied the earnings report to get an idea of what is happening with the stock. Now, I've gone ahead and color-coded what I consider some of the key points to discuss. From the first page, CEO Andrew Jassy stated that they are pleased with the start of the year, especially on innovation and progress to continuing to improve customer experiences. He then goes on to list a number of advancements in the quarter, including Alexa Plus, Trainium 2 chips, Bedrock model expansion for AWS customers to train models and run inferences, and the first Project Kuiper satellites for broadband access were successfully launched. Something to consider is that Jassy stated that Amazon had announced a $4 billion investment through 2026 to expand Amazon's rural delivery network. These are all great things to be working on, especially regarding the new chips and expansion of Bedrock models. So scrolling back up to the top, sales were $155.7 billion versus Wall Street's estimates of $55 billion, which is a small beat and a year-over-year growth of an impressive 9% that included a massive $1.4 billion hit due to unfavorable year-over-year changes in the foreign exchange rates during the quarter. Sales were broken down into a North America growth rate of 8% and an international increase of 5%, which includes what would have been an 8% growth rate if not for taking into account the foreign exchange rates. AWS sales increased 17% year over year. However, that is lower than Wall Street's estimates, which will mark the third straight quarter in which AWS has missed on sales. Now, moving on to earnings per share, if we scroll down slightly here, earnings per share was an impressive $1.59 versus estimates of $1.36, a beat of 17.2%. Operating income increased to $18.4 billion, which is a year-over-year gain of 20.3%. Operating income is broken down into a North America gain of 16%, but a decline in international of 11%. AWS had an operating income increase of 22.3%. With all these great numbers, why is the stock flat since earnings? Well, now we get into the likely part, if not the primary reason. Operating cash flow increased to $113.9 billion, which is an impressive 15% year-over-year gain. However, at the same time, free cash flow declined from $50.1 billion to $25.9 billion, which is a staggering decline of 48.3% in one quarter. So what happened to all that money? To add some color to these numbers, during the earnings conference call, Jassy stated that the decline was primarily due to a surge in capital expenditures by strategic investments in AI, technology infrastructure, especially AWS, fulfillment and transportation network expansion, and custom silicon like Trainium going into the quarter. I was expecting capital expenditures to increase significantly, and this earnings certainly delivered on that expectation for this shareholder. It is certainly not all AWS, data center, and AI spending as stated by Jassy, as it also includes buybacks and other things as well. but the overwhelming majority it is safe to say, went towards AI efforts and infrastructure. With those numbers, I can certainly understand why the stock can be trying to catch its breath at the moment. Amazon also provided guidance for Q2 2025. If we scroll down to this third page here, Amazon expects net sales to increase between 7 and 11%, and this includes anticipation of 10 basis points in unfavorable foreign exchange rates. Also, operating income in the range of $13 to $17.5 billion. However, Wall Street was expecting $17.8 billion, so the guidance was lighter than what analysts were looking for. Amazon stated that it anticipates no legal settlements to conclude in the second quarter. Now, if you're looking to quickly stay on top of financial news, subscribe to my channel for free daily episodes of the Finance Update Daily. Each episode is under 2 minutes with the top 5 or so stories. Now, during the conference call, Jassy stated that tariffs and trade policies and recessionary fears could cause the Q2 guidance to change. In the press release that accompanied the earnings report, there was no mention of tariffs, only unfavorable foreign exchange rates. Jassy also noted that given Amazon's model that has a, quote, diversity of Amazon third-party seller bases, the cost of tariffs is not likely to be passed on, if any, to the customer. With that said, Jassy also said that there is a chance that Amazon could become the place customers flock, given the pricing power of its diversity. Jassy looked to the example made during COVID. He stated that it's hard to tell what's going to happen with tariffs right now, and went on to state that it is hard to tell where they're going to settle and when they're going to settle. Jassy also mentioned that the advertising business grew 19% year over year. In addition, he noted that AI business is already at a multi-billion-dollar run rate and growth at triple-digit percentages. Further, Jassy said that there was an increased demand for AI. Regarding analyst questions during the conference call, an analyst asked about Amazon's ability to capture AI-related revenue, given the market constraints. Jassy said that AI demand is outpacing supply, but expects supply chain improvements and more hardware deployments to help ease constraints later in the year. Another analyst asked about the unevenness in AWS revenue. Jassy cited this was attributed to the unpredictable nature of enterprise migration cycles and involving AI use cases. Finally, an analyst asked about the AWS backlog. Jassy said that there was a reported $189 billion backlog, and Jassy goes on to describe a renewed enterprise focus on migrating workloads to cloud alongside early-stage AI adoption. Well, that's it for this video. I hope you found value in it. If you are looking for more finance news and updates, don't forget to check out some of my other videos. Thank you so much for watching. I'll see you in the next video. Bye bye.